welcome to the very first episode of By All Accountings. I'm your host, James Pellechia, and my goal is to deliver to you relevant and topical insights affecting the accounting profession. If you find this video useful, please let me know in the comments and feel free to share with your colleagues. And if you want me to cover a topic in the future, please let me know in the comments as well. Like a good DJ, I'll take requests. A little bit about me and my street cred. I am a CPA who's worked for many years in public accounting and in industry, and I'm an expert in the areas of SEC reporting and internal controls. And I love baseball. Today we will discuss artificial intelligence and its significant impact upon the accounting profession. You know, when I think of AI, the first images that come to mind are the HAL supercomputer running amok in 2001: A Space Odyssey, or the machines taking over the Earth in the Terminator franchise. In all seriousness, while AI may not be as overt in our day-to-day lives, it's a very big deal for us in the accounting profession. What is AI? AI is a broad term for computers solving problems on their own based on neural networks that resemble the structure of the human brain. AI excels at automating repetitive tasks and reducing human error, potentially resulting in three outcomes that businesses love: cheaper, faster, and more accurate. It's good at processing massive amounts of data quickly, finding useful trends. And it's also great for compliance by detecting data anomalies and preventing fraud. Most importantly, for accountants, AI will enable us to spend more time looking forward in our work product as opposed to living in the past where we are consumed with monthly closes. There are several different types of AI. I'm going to briefly discuss 5 of the most popular types. Speech recognition. I think we've all used programs that can convert speech into text, period. It's great when it works! Exclamation point. Natural language processing, or NLP, works alongside speech recognition to allow computers to learn, understand, and produce content in human languages. A great example of NLP is a smart assistant such as Siri or Alexa. Hey Siri, tell me about computer vision. Computer vision. This is used to analyze images and make conclusions. This technology is used in self-driving cars and also in drones to monitor inventory. Does this mean that staff auditors will no longer have to get up early on New Year's morning after a late night of partying to perform a year-end inventory observation? It looks that way. Machine learning. This involves using algorithms to recognize patterns in data to learn from them. This technology is used to read various kinds of documents to perform trend analysis to identify outliers and detect fraud. Robotic process automation, or RPA, isn't technically AI, but it works alongside AI toward the common goal of automation. RPA is a set of automation tools used to replicate repetitive tasks by scale, like bots, for instance. Examples of where RPA is used is in invoice processing or manual processing on spreadsheets. Now that we're familiar with the broad types of AI that are out there, exactly how do we apply this to accounting? Well, there are many applications of AI for accounting. I'm going to focus on some of the more popular ones. Expense reports. The AI reads, analyzes, and processes the documentation and flags issues for further review. Popular expense reporting software such as Concur and Expensify use this tech to capture data from scanned receipts and later compare the expense reports against the company's expense management policy. Accounts payable. Given the repetitive nature of AP, I'm not at all surprised that AI has infiltrated it. AI can automate most of the steps in the procure-to-pay cycle. This definitely sounds cool, but we need to temper our expectations. As any AP professional knows, there are many ways the matching process between invoices and purchase orders can go sideways. Human intervention will still be needed here to some extent. This is where software such as Data Robot is handy, as it can create predictive models to flag these transactions that require human review. Accounts receivable. Software such as Blackline AR intelligence can more accurately predict when your customer will pay by analyzing customer demographics, past transactions, and external factors. We can predict customer turnover and the likely short-term impact of a rise in supplier costs, which will enable accounts to address the issues before they become problems. Software such as Chata, which is a data-focused chatbot, can transform your questions into database queries. For instance, you can ask the bot who is past due on their invoices, and the bot will return the requested information on those deadbeat customers. Reconciliations. Who wants to spend hours on reconciliations? Software such as ReckonArt can perform bank reconciliation tasks, as well as reconciliations for payables, receivables, intercompany, and financial close management tasks. Now it gets more interesting, as AI is capable of some higher level tasks, such as forecasting. Software such as Blackline and Fathom can analyze historical data, create cash forecasts, and generate reports. Even less sophisticated products such as QuickBooks and Xero have capabilities that anticipate a company's future cash position. Risk assessment and fraud detection. Based upon what AI has learned from people, it will enhance risk identification and prevention. ISDI is an example of software that performs this analysis, as it can enable people to find patterns and anomalies in complex data sets with the help of algorithms. Fraudsters, you're on notice. Contract interpretation. Deloitte's D-Track software applies advanced analytics to various kinds of contracts to improve contracting efficiency, visibility, and compliance. Audit testing. For certain tasks, AI can perform audit procedures for 100% of a company's testing population. This is a game changer for two reasons. One, sampling risk in audits is essentially eliminated. And two, staffing costs are reduced. I wish this technology was available when I was an auditor. AI sounds great, doesn't it? Where do I sign up? Not so fast. Like any emerging technology, AI has its risks, and companies need to weigh the pros and cons before they implement the technology. Some of the major risks include visibility. It can be difficult to see how AI comes to its conclusions in problem solving. I can imagine this being a point of contention between an auditor and a company. Trickery. AI assumes that source data is reliable. It is entirely possible that AI can be circumvented by unscrupulous people who find ways around the logic of the AI. Ethical concerns. If AI becomes advanced enough to perform strategic tasks, I could easily see a situation where a company designs the AI to work to its advantage. The company could cook its books and a major accounting scandal could ensue. Our profession certainly doesn't need another black eye like WorldCom or Enron. Security concerns. AI software isn't as mature as legacy systems, which makes them more likely targets for hackers. Data breaches and cyber attacks can affect the integrity of the underlying data. Machine learning algorithm bias. This will produce outcomes that reinforce existing patterns of discrimination. The machine learning is only as good as the algorithms from which it is based and the quality of the data from which it is fed. At this point, you're probably thinking, James, with the rise of AI, what does the future of the accounting profession look like? Well, I'm going to tell you the bad news first. Positions such as bookkeepers and accounting clerks will be eliminated on a large scale. Staffing needs at audit firms will be decreased substantially due to AI being more capable in performing low-level, high-volume tasks. Lastly, companies and audit firms that are resistant to this technology will likely fall behind and may go out of business. You know, I think of the movie Moneyball, where Billy Beane, the general manager of the Oakland A's, had a conversation with one of his old school scouts. Billy was championing the use of analytics in construction of the team's roster, and he was met with a lot of resistance by the scout. At one point in the conversation, Billy got so frustrated he told the scout, "Adapt or die." I think that this is a situation facing accountants today. Adapt or risk becoming a dinosaur. Well, what can we do to adapt? For starters, we could become proficient in visualization software such as Tableau. We could also become proficient in programming languages such as C++, Java, or Python. Lastly, we could become proficient in at least one major ERP system, as AI software directly integrates with these systems. Accountants in particular need to understand the AI technology deployed by their clients and how it will interact with internal controls. So what's the good news? The good news is that accountants who embrace AI will continue to add value to their companies and will be in high demand. The other good news is that AI is not capable of performing high-level tasks, at least not yet. We still need CFOs to make strategic financial decisions. We still need technical accountants to write white papers. And we also need auditors to opine on the financial statements. At the end of the day, AI is not going to replace the accounting profession, but will serve to enhance the profession for those who take advantage of it. Well, that wraps up today's discussion. I thank you for watching, and I will see you soon for another episode of By All Accountings.